The week started with a rally in the euro, French equities, and crude oil, and is set to continue with political uncertainty, increased volatility due to thinning trading volumes, and caution. So, welcome. This is Swissquote's Daily Market Talk. So the new week started on a positive note, especially for the European markets, but the positive vibes will probably leave their place to the chatter of possible scenarios regarding how the French will be able to prevent Marine Le Pen from gaining a majority in the parliament in the second round of the legislative election that will take place just this weekend in France. Now, the questions are, obviously, will the opposition parties in France form a sufficiently convincing alliance together to prevent Marine Le Pen's national rally from gaining an outright majority in the parliament? Or will Marine Le Pen's national rally just amass the majority in fine, and that despite all efforts? Now, both scenarios mean, obviously, some political uncertainty for France and beyond the French borders, but investors' hearts are pounding toward the first option, which is, well, a hung government in France, which would at least prevent Marine Le Pen from exploding the national debt levels and jeopardize and reverse Macron's efforts to pull the national debt in France back to levels that are acceptable by the EU rules. So the latter will help tame the spread between the French and the German sovereign bonds, which already actually retreated below the 80 basis points level on Monday on hope and on pricing that Marine Le Pen won't secure a parliamentary majority this weekend, and that could also support here. So the euro-dollar rallied all the way up to 107.76 level yesterday, flirted with its 50-day moving average, but retreated to around 107.30 level this morning. Same for the equities. The CAC 40 in France opened the week with a bang, really gained as much as 2.7% before pairing its losses and closing just 1% up. The European futures are in the negative this morning, mind you. Now, in other news, beyond France this time, the European Central Bank chief Christine Lagarde warned that the bank, doesn't have enough evidence in its hands that inflation threat is over just yet, hinting that, the European Central Bank will probably bypass a second interest rate cut when it meets later this month. Now, looking at the economic data, inflation numbers revealed by major Eurozone countries since last Friday are quite mixed. It is expected in France, a bit higher than expected in Spain, and a bit lower than expected in Italy and in Germany. But overall, the actual CPI numbers that are released lately don't deviate much from the market expectations, and clearly not enough to deviate the investor attention from the French election jitters this week. So the aggregated inflation figure for early June for the Eurozone is due this morning. Both headline and core inflation numbers in the Eurozone are expected to have eased slightly in June. So if that's the case, we could see the European Central Bank breathe a sigh of relief. And if not, the euro could see a minor support in the coming hours. But in both cases, I believe that the euro will remain under the pressure of French political uncertainties and jitters throughout this week, and any rally attempts in the single currency will likely remain limited into the second election weekend that we will see in France. Now, in the US, economic data released yesterday posted softer than expected ISM manufacturing numbers in the month of June, and also posted a decline in the construction spending in the US in the month of May. Atlanta Fed's GDP now plunged to 1.7% level, suggesting that the US GDP growth may have retreated to 1.7% level in the second quarter this year. So all that softness in the data could have pulled the US yields lower, but no, because there as well, the political news interfere with the market pricing these days. So according to the latest, the Supreme Court in the US said that Donald Trump will benefit from some immunity from criminal charges for trying to reverse the 2020 election results, making him just a step closer to winning this year's presidential election in the US after last week's worrying debate for Joe Biden. So the Trump win expectation makes US curve steepening an active bet, according to Morgan Stanley analysts who say that, Donald Trump in the White House will slow growth and boost inflation with his increased trade tensions and more tariffs on the pipeline. As such, the US 10-year yield is rising faster than the US 2-year yield these days, while both are rising obviously. And in the FX markets, the US dollar index fell at yesterday's trading session on a knee-jerk jump in the euro, but is upbeat again this morning. The dollar yen, on the other hand, continues its hike above the 161.50 level, preparing to test the 162 psychological level with limited upside potential given the direct FX intervention threat, and the franc is giving back the safe haven gains of late. The euro franc is back above the 100-day moving average, while the dollar franc takes over the 50-day moving average offers. The Swiss National Bank's dovish stance should keep the Swiss franc on a softening path apart obviously from periods of sudden franc appreciation due to increased safe haven flows that we might see in this election context. In equities, the S&P 500 consolidated gains near record level on Monday, while Tesla jumped more than 6% to above its 200-day moving average ahead of quarterly deliveries report that's due today, and that could actually confirm a second quarter decline in deliveries. The Chinese rival BYD, on the other hand, is down in Hong Kong this morning after announcing to have sold 1 million cars in the second quarter, around 426,000 of them being purely electric. Don't ask me. So in energy, crude oil kicked off the week on quite a strong positive note ahead of the July 4th holiday in the US, which, according to AAA, will see a record number of drivers this year, and also Hurricane Beryl, which is not expected happily to hit operations in the Gulf of Mexico, but there is a chance of disruption later in the week, still it is said. As such, while US crude rallied 2.4% yesterday and hit the $84 per barrel mark for the first time since April, risks remain tilted to the upside. The next target for the oil bull stands at the $85 per barrel psychological level, where we should actually see support and a downside rebound, probably, given that the soft manufacturing data from the US and from China recently, the start of this week, don't give a further support in terms of fundamental support that we might see for the oil prices. Elsewhere, cable remains under pressure ahead of Thursday's general election in Britain, while the FTSE 100 index there couldn't really benefit from a softer sterling and a rapid rise in oil prices at yesterday's trading session and closed the session near flat. Now, the election uncertainty in Britain seemingly keeps the bulls on the sidelines, even though a Labour win is seen as a net positive for the British stocks and sterling as well. So the price pullbacks that we might see in the FTSE 100 are likely interesting opportunities to strengthen long positions in this energy-heavy British stocks that should fully benefit from reflation trades, reflation inflows once the election jitters are behind. So zooming out, the FTSE 100 didn't do bad at all over the past few quarters. The index posted a fourth quarter gain in the second quarter of this year, has hit a record high in May, and remains upbeat as we enter the second half of this year on expectation of more political stability, an upcoming Bank of England interest rate cut, and also improved reflation flows, as I said earlier. So this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.